Hey everyone, thanks so much for coming out. This is really, really special. I've been following crypto for quite some time, but actually I found out about SoFi initially through these events. So it's really surreal to be up here on stage talking about a subject that I'm super passionate about, cryptocurrency. Unfortunately, it's one of the most misunderstood topics out there. I like to quote comedian John Oliver, who did a segment on cryptocurrency. You should watch it if you haven't. And he says, cryptocurrency is everything that you don't understand about money combined with everything you don't understand about computers. And, it's quite true. And so today, we only have an hour with you. It's going to be really difficult to distill this topic into just an hour, but I think I've got the right panelists to help me on that journey and to help educate you guys a little bit. So before I bring them up, I'll just give them a quick intro. So Jill Carlson is the co-founder of the Open Money Initiative. It's a nonprofit that researches how money gets used in economically repressed societies. And she's also an investor at Slow Ventures. Arianna Simpson is the founder and managing partner of Autonomous Partners, which is an investment firm focused on crypto and digital assets. Previously, she worked in sales and product at Facebook and BitGo. And last but not least, Casey Caruso. She's an engineer in the machine learning team at Google by day and a crypto advisor at Bessemer Venture Partners at night. So really impressive cast here today. So please give a warm welcome to Jill, Arianna, and Casey. All right, I'm excited to dive in. So before we get started, I'd love a show of hands. How many of you think that we'll still be talking about crypto in, let's say, 10 years? All right, it's a very pro crowd here. Well, that's great. And we're going to cover some of the trends that may lead us to believe that or disbelieve it. But regardless, it's good to see that there's a lot of energy and passion about this. So thanks for coming out. One of the things I want to start out with, so a lot of us in the crypto industry, we kind of struggle to explain what crypto is because maybe we get too deep into the weeds around the technical details and maybe not enough about why it matters, what the purpose is, what's the problem. I want to start with you, Jill. You've done great work at the Open Money Initiative. Can you tell us a little bit about what your impetus was for starting that?
Yeah, absolutely. So I guess maybe I'll start actually with how I first heard about Bitcoin in really kind of a serious context, which was a few years out of school. I was working on Wall Street. I was working on a trading desk, trading the debt of countries like Argentina, Venezuela, emerging markets, specifically in Latin America. And I had a colleague who was a broker of mine. He and I would chat every day. He would give me kind of the local market color on Argentina. And he always had something interesting to share. Now, Argentina at the time was going through a period of extremely high inflation and also of capital controls, meaning that people within Argentina could not freely move their money in or out of the country. And he calls me up one day and he says, Jill, you're not going to believe it. I've finally managed to get money out of the peso. I'm so excited about this. I bought this thing called Bitcoin. And this was 2012, 2013. The only context I had heard of Bitcoin at this point was people using it to buy drugs on the dark web. And I was like, oh man, dude, I don't think you want to do that. Like maybe just hold on tight with the peso a little bit longer. Maybe the political situation will improve. And he dragged me kicking and screaming down this Bitcoin rabbit hole and convinced me over time that actually this was really transformative and that he, for the first time, was able to do something that he couldn't do before. And that was get his money out of the country, get his money into another asset. And so that has been the lens through which I have always looked at this space, is the ways in which cryptocurrency in general and Bitcoin in particular can be used as a tool of freedom for people who are otherwise locked into a system that's not working for them. And so this is the work that I'm doing with the Open Money Initiative. My colleagues and I spent the better part of the first half of this year on the ground in and around Venezuela, which which is now going through a period of hyperinflation and also capital controls. And it's been incredible to see the way that people are hacking the system and in particular using Bitcoin there.
Right. And there's obviously a lot of serious systemic issues, right, that happen in these countries as well. So it's not that, Bitcoin is the panacea that fixes everything.
No.
But just talk a little more about, why does that financial freedom, matter so much to people on the ground? And have you seen actual, real use cases of people using
Oh,
crypto
yeah.
there
Yeah,
today?
absolutely. And, as you say, it's not to overstate it, right? Of course, there are systemic issues that no technology can solve. But the important thing to bear in mind is that Bitcoin in places like this can serve as an escape hatch. And so in a place like Venezuela, where again, there are capital controls, in a place like Iran, where there are extreme sanctions in place, people have very limited options of what they can do with their money, how they can move it in or out of the country, and even what assets they can buy to diversify. So in Venezuela today, just for context, they're experiencing 10 million % inflation a year, which is almost a meaningless number, right, at that point. But to put that in context, what that means is that shopkeepers are running around the shop floor and they literally can't put up refreshed prices fast enough to keep up with the inflation as it affects them just over the course of a day. And in a place like Venezuela, you're also not allowed to use the US dollar. That is actually banned within the country. And so there have been attempts, of course, of people to smuggle in suitcases of cash, any alternative to this money that's failing them. But there you're facing enforcement action from police and local military. You're putting really your own safety at risk if you're going to try and use anything from the US dollar to the Colombian peso or the currencies of other neighboring countries that might be easier to smuggle in or out. And then suddenly you have this other alternative that is digital, that's frictionless, that's borderless, that's global in nature, and that most importantly, the local government can't viably stop. And we can get into a little bit of what that means, I'm sure. And that is really the important takeaway here of what Bitcoin can offer in places like this.
Thanks for sharing. Yeah, it's really sad. And we'll get into some of the details, but I wanted to also pass it on to the other colleagues up here on stage as well. So Arianna, I saw your Twitter bio said you got into crypto before it was cool, which is awesome. But obviously, you first discovered it before a lot of people were talking about it and all the hype, right? So what got you initially interested in to dive into it?
Yeah, similar story, different continent. I was traveling around Southern Africa in early 2013, and I spent some time in Zimbabwe, among other places. And so I was there a few years after the worst of their hyperinflation, and they had a very similar situation where at its peak, their currency was devaluing by 50% on a daily basis, which it devastated their economy. And they had to switch over to the US dollar to restabilize things. So when I was there, they were just getting kind of the economy back in action, but it was clearly still a very dire situation. And so I started thinking a lot about kind of non-state-run currencies and what might be possible in a world in which a corrupt central government couldn't recklessly print cash to pay off his military cronies, as was happening under Mugabe's regime there. So, I discovered Bitcoin and was like, holy smokes, this is really exciting. And so, I think, I joke about in crypto before it was cool, but at the time, I think everyone told me I was insane because a lot of the infrastructure was really lacking. So they were like, oh yeah, that would be cool in Africa, but like, how do you do that, right? Like, how are people actually going to interface with this currency? And I think we're now starting to see that people are developing, lightweight mobile wallets that can be run on feature phones. So you don't necessarily have to have an iPhone or anything like that. And you can actually, really become your own bank, which I think is a particularly interesting proposition for people who are underserved by traditional financial institutions in a lot of the world. And so I think it's very easy to say, well, I live in America and like my bank account kind of works. And I do think there's a lot of benefits that, even people in the United States can draw from crypto. But we tend to have a very, I think, US-centric view. And I think that's, something that we should try to go beyond.
Yeah, definitely. All right, and we'll finish up with Casey. You've got a really relevant experience, obviously, in engineering and investing. So what, initially drew you to this industry?
Yeah, so I think I have a little bit of a different story. I did not visit any continent that showed me what Bitcoin was valuable, but I have my backgrounds in computer engineering and computer science, and I've always come at it from that angle. I actually started as a miner in this space and then started staking more recently, and for the last 2.5 years have really been more focused on investing. But truly, it started as a way to make ancillary income, if I'm going to be totally honest, and now it's definitely the investing. I think that we have really clear signals that this space is maturing. It's becoming a true asset class, and the opportunity to invest right now it's an incredible time to be doing this.
Yeah, let's tease out some of those signals without going too deep. And,
Yeah,
if
yeah,
we have time,
so-
we'll definitely cover them for sure.
I definitely think I'm pretty data-driven about this, and I feel that the signals are a lot, but I would say like the top things that I look at, first off is adoption within the next generation. It's pretty clear that the younger folks are really coming into this strong for many reasons. Another thing is developer love and interest. Developers are growing year over year since 2010, which is fascinating. Another thing I look at, like enterprise adoption. We all know with like Libre and Fidelity, there's just huge, massive players coming into this space. Then the last thing I would say, the signal I track pretty much daily, is institutional demand. I think it's been a retail market for some time, but the tide is definitely shifting in that regard.
Awesome. Yeah, exciting stuff. So let's dive a little bit into money itself, right? So money's taken lots of different forms throughout history. It's not just the US dollar, but could be gold, could be shells. It's taken lots of different forms. So what are some of the properties that actually make money useful and better than other types of money? And we can open this up to anyone, but yeah.
Yeah, I'll dive in. So one of my favorite stories about the history of money that I learned since getting involved in this space and really grappling with trying to come up with priors and sort of past examples that might be comparable to Bitcoin is the story of the Yap stones. And so there's this island in the southern Pacific called Yap. And the Yapese people had, for a long time, a system of money that would feel very foreign to any of us, which was that they had these big, giant, round stones throughout their island, and they used those as their system of payment. But now, of course, these stones were big and cumbersome and couldn't actually be moved. And so what they developed actually was just this sort of decentralized, internalized ledger through which everyone just kind of knew who owned what stone and used that as even down to the fraction of a stone of, okay, my family owns a third of that stone and your family owns a quarter of it, and so on and so forth. And this system was actually very effective. Now, there came a point where they did actually...
Does it scale?
Yeah.
Does it scale? Indeed, yeah. There came a point where they actually at one point needed to move one of these stones from one island to another. And one of these stones sank to the bottom of the ocean. But here's the catch, is they continued to actually use that stone as their system of account. And so the way that this sort of starts to parallel into Bitcoin is you can think of Bitcoin, one of the big pushbacks that people have around it is, what is it? I can't actually hold it or move it or touch it. And while with the stones, yes, you could attempt to move them, although, again, that failed and sank to the bottom of the ocean. The point is that it was the ledger that mattered, and the ledger that people actually, for the most part, held inside their head, that as long as they were all on the same page about, that's what counted.
Any other stone stories?
I mean,
Yeah.
No, but like
Great story.
we
Good
could talk
job,
about
Bill.
we could talk about just the characteristics maybe that's.
Yeah, I mean,
talk a
I
little
think
bit
I
about,
think
yeah,
I mentioned this a little bit, but I think one of the things that's so powerful about Bitcoin is that it's extremely difficult to manipulate Bitcoin itself. I can't print more. The schedule of release, the number of Bitcoins that will exist, all of these rules are predetermined, and it makes it much more difficult to have any kind of actor, whether that's, the president or, the any kind of bank, come out and say, oh, we're just going to change the supply. We're going to inflate the currency. And so that, I think, is a really powerful property because all of a sudden you're not subject to the whims of any one ruler or whatnot. And so you can have more confidence in the fact that, like, you own this asset and it's going to still belong to you in the future. And the important thing is you for the first time in kind of the modern monetary system, really have the ability to control your own money in a way that is not typically seen in the current financial system, in the sense that, I don't necessarily have to use a bank. I mean, there are sort of a new generation of crypto banks, if you will. I think you could bucket Coinbase in that and a number of other players. But at the end of the day, if I want, I can put my Bitcoin on a wallet of some kind, a physical device, and take it with me. I could even store the seed phrase in my head and bring it across borders. And so, I'm not subject to the whims of really anybody, and that's a really novel concept.
Cool. Yeah, and we should just dive into some of the specifics, I guess, right? So, obviously, digital money makes some sense, intuitively, but it's been difficult to create until pretty recently. Why has that been the case up until Bitcoin got created?
Well, I mean, there's actually a pretty long, so people are like, oh, Bitcoin, it's so new. And it's actually, if you go and look at the history of digital currencies, it's actually not that new. I think it's the first one that has really gotten to a certain degree of adoption and mainstream awareness. But there's a lot of history of kind of development of various kinds of e-cash. So a lot of the foundations in cryptography and kind of some of these design schemas have been under development for decades.
Yeah, I totally agree. I think Cash is one that people often don't reference, but the proof of work algorithm that Bitcoin's based on actually started there. That was the mid 1990s. I think with most technology, honestly, something gets credit, but it's really the evolution of so many past things. Yeah.
Gotcha. Let's break down that proof of work since you brought up the topic. This is a 101, right? So what does that mean specifically?
Yeah, I mean, I think understanding Bitcoin and cryptocurrency as a whole, it's really important to understand the mining aspect. So I think the best way to think about mining is to start with the goal. And the goal of mining is to produce blocks, hence the blockchain.
Well, wait, what's the blockchain?
Yeah, I mean, so the blockchain, Arianna, is they're basically transactions that are cryptographically linked to previous ones. And I think in explaining mining, you really understand it. So I actually maybe we'll do an example.
Sure.
Okay, that would be valuable. So like, let's say I do send some Bitcoin to Arianna, and we'll take Bitcoin again as the example. What happens behind the scenes is that transaction goes to something called the mempool, which is like a queue or a waiting room for transactions. And then all the miners, which you can think of as computers, they're really just servers, physical today, literally physical servers that sit in locations around the world. They all pick up these transactions and will form things called blocks. So they're just groups of those unspent transactions.
And those blocks together form the ledger. Still a reference.
Yes.
There you go.
It looks like the
connects.
capstones.
Yeah.
Exactly.
And then what happens? So then basically you want to publish to the chain and build these blocks. And to do that, you need to be the first to solve what's commonly referred to as a cryptographic puzzle. I like this analogy. I do think it's overdone. I think if you Google, how does mining work? It always says it's a puzzle. It's not really a puzzle. It's more like it's a cryptographic hash function, which is a way.
As everyone knows.
Yeah, obviously.
Okay, maybe
It's
not.
a random number
That's for the one.
generator.
Yeah,
This is the problem. Casey's too smart. We're all just trying to keep up. Fine.
No, you're spot on. It's a random number generator.
Yeah.
And you're specifically, I almost didn't believe this when this was first explained to me, but the random number generator is just trying to generate a string of numbers that has a certain number of zeros
Yes.
at the front of it. And what that enables you to do, if you hit the jackpot of, yes, I got 5 zeros in a row, you have won basically the battle royale amongst all of these computers to be the computer that publishes your block to that ledger. And then
the
you get
reward-
rewarded.
Well, the rewards changed, but you get some Bitcoin and then also the transaction fee, which varies. But yeah, that's
I think it's worth zooming out though for a second, maybe to talk about why any of that is important and why that matters to this system. And for that, I want to go back to what you were both saying about there's this long history, right, of various people trying to come up with digital cash schemas, and none of them worked for one reason. They didn't yet solve something called the double spend problem. And the double spend problem is exactly what it sounds like. It's the problem where, let's say I have a photo, right, on my phone. If I send Casey that photo, guess what? I still have the photo, right? Like, I still have a copy of it on my phone. Sure, Casey has it too. Now, what happens if I want to send Casey $20?
You can't still have the $20
I can still have the $20, right? That is the double spend problem. And today, the way that we solve this, you're all sitting there being like, well, we have Venmo, we have, Bank of America online banking, just total nightmare to deal with. But it is, right? But was not expecting that to get the ovation. But
like,
okay,
who needs Bank of America?
but to your point, it is a total nightmare. Why? Because it's going to take 3 days for my transaction to get to Casey, because we're going to have this series of intermediaries double checking, okay, Jill no longer has the $20 in her account. We can now credit it to Casey's account, so on and so forth. Now, with cash, that's not an issue, right? If I were to take $20 out of my pocket and hand it to you, what's the clearing and settlement process that's happened there?
It's physically settled.
Yeah, there
Who's
is
holding
none.
it?
Physical
There
settlement.
is none. And so if you think about the concept of digital cash, as opposed to digital online banking, Venmo, whatever, the difference there is we want to have none of those intermediate hops. We want to remove that. And so in order to do that, we need to solve the double spend problem. And that whole random number generator sequence competition battle royale that we were discussing, that is a critical component to solving that problem.
Right.
Yeah.
Want to add something to it?
No, I think that's perfect. It's just to loop it fully back.
Yeah.
The reason that works is because that puzzle, it takes a certain amount of minutes to solve. It's actually designed for the difficulty for Bitcoin to always be 10 minutes. And because of that, the double spend problem's avoided, because by the time something gets published, we have like an updated state of where everything is. So nobody can double spend it, because all of the nodes, all of the peers in the network are aware of everything that's happened. And then if
I can go back to the Yap stones for a second.
Back to the
You could have
stones.
Yap stone away.
With
Yap
the Yap
away.
stones. But I mean, it would be as though, on the island of Yap, I do a transaction.
I think you just like
right?
saying
Yeah, same. I think you like that word a lot.
But I do a transaction. The whole island needs to get sort of updated to the point where they now know the updated state of who owns what stone.
Yeah.
And so that's the importance of having this.
Yeah, think of it. You can think of it kind of like a Google spreadsheet in a way, right? It holds a whole bunch of rows that have transactions.
Probably a
They're
more relevant
immediately- Yeah, well,
No.
I'm just bringing
Don't
it
kid yourself.
to the 21st century. But think of it like a Google spreadsheet, right? Lots of people around the world can see it, but if anyone could update that in real time, that would be a problem, right? Because how do you know that someone hasn't gone in and just changed a whole bunch of crap, right? And so you need to kind of control that edit access, and that's kind of what Casey was mentioning with that process.
Yeah.
Did I get that
that's
right? All right.
Both analogies, fabulous.
Yeah, but so just to wrap up on that mining point, right? So mining, these are a bunch of servers and computers that actually are running at all times. And so one of the concerns that people have is, does this take a lot of electricity? Like, is this something that's really, costly to do?
Oh my gosh, I can't.
know we hear this all
can't
day.
either.
Okay, I'm gonna try.
It's gonna trigger you,
because
and yeah.
for the benefit of
Give you your
everyone.
answer.
Okay, I mean, at a high level, yes, it is expensive and intensive energy-wise. In general, I think if you go and look at
Yep.
how energy intensive is the traditional financial system, much more. How hypocritical are we as a society about what we choose to spend electricity on? Vary. So, it's kind of like the paper straws, right? It's like, how much do paper straws fucking suck versus like how much plastic is in the cups? Like 10 times. Like why do I have to have my straw melt in my mouth? Like, it's absurd, right? So it's just I'm over paper straws and I'm over that point.
Paper straws and Bank of America.
Yeah, we got a
Down
hate
it,
list.
yeah.
And then the other point that I think is really important is that a lot of people, I think, who make that criticism don't understand how energy markets work and how energy is produced and consumed. You can't just zing energy without losing any across the world. So if I have a giant, hydro facility producing electricity in a given area, a lot of that is going to go to waste because I can't move it seamlessly to the other side of the world. So what's happening with Bitcoin and any kind of crypto mining facility is that it basically migrates to wherever you have cheap surplus of energy, which is often places which are the middle of nowhere, where you have, again, a hydro plant or some other natural source of energy. So oftentimes, a lot of this energy is actually coming from renewables in places where that energy would basically go to waste entirely anyhow.
That's why we're trying to buy
second.
Greenland.
Oh, God.
Are we done
Bad
with that?
joke. Bad joke. All right. But yeah, I want to get on this section just touching on FUD, right? So fear, uncertainty, and doubt. And some people do have that with crypto. So I want to just touch on a couple points. So one is that, we're not seeing tons of people actually use this on a regular day, spend it on a regular basis. Do you think that's going to change in the future? Does this even matter at all? What are some of the barriers that are stopping people from
daily active hodlers? I think the concept of spending and using are kind of often conflated. Yeah. I don't on a daily basis spend most of the money in my bank account, but I am still deriving a lot of utility from having it there. So just because you have an asset and you're not using it on a daily basis, I don't think at all means that you're not using it. Number one. And number two, I think if you actually look at how many transactions are happening on the Bitcoin network on a daily basis, it's comparable to Discover network, for example, the credit card. So, it's starting to enter a size in terms of transactions where it actually is meaningful. Mm-hmm. And, over time, obviously there's volatility spikes in terms of, how many transactions are happening on the network in any given time period. But overall, the trend line is very clear.
What I would say is, who in here knows what a Tor browser is or a VPN? Okay, it's most of the audience. Who in here uses a VPN or a Tor browser on a daily basis? On a daily basis? Wow, that's a lot of you, actually.
That's a lot.
But so, the idea here, though, is that,
Do people know what VPNs and Tor browsers are? They didn't raise a hand?
Yeah.
Anyway, go ahead.
But so, a Tor browser...
Should we define?
Yeah.
Yeah, a Tor browser it's something that is most often used to sort of access the dark web, but it's also used by activists, for example, in countries where they don't want or can't access otherwise internet services that their government is censoring. VPNs can serve similar utilities for people in these types of countries. And so this is where I return to the utility of something like Bitcoin, is that I might not need to use a Tor browser on a daily basis. Certainly
Unlike
not living in the United States. Yeah. Unlike apparently the audience. I assume that was an answer to VPN, not Tor browser. Yeah. But I might not need to use it on a daily basis, but am I glad that it exists? Am I glad that I have that optionality there? Absolutely. And similarly, I might not need to use Bitcoin on a daily basis, but am I glad that that optionality exists for me and for people around the world? 100%. And so that's how I tend to think of the utility of it.
Gotcha. Okay, that makes sense. Let's cover some of the trends, and we've got about 9 minutes left in this section. So at the end of this, we're going to open it up to questions. So we've got about 20 minutes or so for questions. And for those on the live stream, feel free to type in some questions in the comments as well. So we'll read from that and answer as many as we can. But let's keep going. So on the trends, I'm interested in the demographics one, the one where you mentioned, the next generation is interested in this. And I think this makes sense. I used to work in gaming, right? And so people use, Candy Crush credits or Fortnite V-Bucks and things like that. And so if you kind of grew up with that, maybe it's more intuitive, but what are you seeing out there?
Yeah, I think that's a really great point. The fact that the culture is already really accustomed to digital currency, but I think to drop some stats on you guys.
Drop it, Casey.
So one in 3 U.S. college students today own stocks, which is, a third. That seems reasonable. 1 in 5 own crypto, which is crazy. So, just a room of 5 people, one of them is likely to own Bitcoin or Ethereum. And that number is just growing year over year. The other thing with the next generation that I think is fascinating is that 85% of the top universities all have crypto courses. And the coolest thing about this is if you look at the top universities, it's not one. Stanford has 10 courses. Penn has 6. Harvard has 4. Like, the list goes on. And I think what this alludes to is that the smartest kids in this country aren't graduating just even knowing about crypto, but they're owning it. So you just think about this next group of kids that are coming up to rule this world, and this is just so second nature to them. That's what I think.
Yeah.
We could be wrong,
yeah, I don't know.
but that's what I think.
No. Those are impressive stats, and I think the education piece around it, especially if they're teaching in schools, is going to be pretty impactful, and it's like part of why I want to do these types of events, right? To share the knowledge. Let's touch on the institutional one next. I think that's interesting as well. Anyone can feel free to dive in there. What are you seeing in the industry there?
Institutional demand.
Yeah, institutional demand. A lot of 2017 obviously was driven by a rise in consumers and retail people getting excited about the possibility of making more and more money. But now it seems like there may be, from what you're saying, institutional interest.
Yeah, I think this is kind of actually, I think to my knowledge, the first asset class that started with retail and then is moving institutional. Typically, historically, what happens is something is limited to institutional access, and then eventually the only time that retail can get involved is like basically once all the money's been made. And I think we're seeing that trend in other categories as well. So for example, the average time to IPO in 2001 was 4 years, and now it's around 11, depending on which numbers you look at. And so all of those years of gains are not accessible to public market investors like me or you, and they're only accessible to venture capitalists and other people like that, which
like
is
me or
also
you.
Me. Yeah, it's fine. I was wearing my retail person hat. It's fine. But anyways, the point stands, which is that crypto has an interesting, it's accessible to anyone, which I think is one of the things that makes it really interesting because it's open. It's not gated by any sort of entity. Institutions at this point are starting to catch on to the fact that, there might be something interesting here. And particularly, as I think yields in other asset classes have gone down, hedge funds are always looking for other sources of alpha, like more of the, traditional cohort of investors who typically own the vast majority of other asset classes are starting to say, hey, this might actually be interesting. And partially that's because they're becoming more educated and just starting to actually understand what's going on, but also because the market is now becoming large enough where it's actually possible for someone to start, deploying tens, hundreds of millions of dollars into it in a way that was not possible even just a few years ago.
Yeah, I would also add there. No stats this time. Right. But I would add that I think it's remarkable how nascent this industry is and how far we've actually gotten with such little infrastructure. If Goldman Sachs wanted to invest in this 3 years ago, they literally could not. People ask me this all the time. Why aren't big players in this? It's like because they had no way to store it, and their compliance department would look at them like they were crazy if they ever said they want to deploy capital to this. And that's what's so cool about this. It's like people think this is a slow-moving industry. They're out of their minds. Yeah, it's been around for 10 years, but this is tech that started in academia and got to retail users, and it's just now crossing the chasm of being even investable for these big players. So I just think it's really important to mention that.
Yeah, absolutely. I totally agree. And to Jill's earlier point about, Bitcoin's for buying drugs on the dark web. Like when I left Facebook, literally everyone was like, so you're becoming a drug dealer? And I was like, not exactly. But to go from that to now, like Harvard and Dow, institutions of that caliber starting to deploy capital into this is bananas.
Yeah.
Like literally in the course of a few years, we've gone from this is like clearly scammy internet money for drugs to, oh, this is an investable asset class. Like that happening in the span of 5 or 6 years is really insane. And so I don't think you can overstate how quickly it is actually happening if you think about it in that context. It's a good thing.
It is, yeah. Well, time flies. There's only 2 minutes left in this, so if you have a question, think about it, and you can walk up. But I'll ask the last question here, which is basically to come up with one prediction for the future, which is always tough, and especially as you mentioned, it would have been pretty impossible to predict today, 5 years ago. But
I mean, I did.
But you did.
That's true.
So I can't wait to hear your prediction. But yeah, basically, what does 5 years from now look like? What might be different, or even longer if you want to take a longer horizon?
I think one thing that's really interesting is, cryptocurrency, as we've all kind of outlined, it started as this movement of non-state money. And one thing we didn't really touch upon is there's sort of this mysterious origin story around Bitcoin where we to this day don't know who invented it or who created it. And I think that was very intentional because that has allowed it to be really this free money of the people, sort of independent, you and me. But now we're starting to see more and more state actors get into this game of starting to issue cryptocurrencies. Corporate actors, you mentioned Libre, the Facebook project, start to get into this game. And I think that will be a huge part of the story 5 years from now. I think that it will not just be about Bitcoin and about sort of money for individuals, but I think it'll also be corporate scrip and also a new form of state-issued fiat currency.
Prediction. Well, I would predict that. One of my theses for a long time has been that the first version of crypto is really as money. So Bitcoin is a form of money, but I think eventually the underlying technology, blockchains, will be used across a number of different industries, and we're starting to see inklings of that. But to be honest, I don't think many of those networks have really gotten to any sort of meaningful scale yet. But the way I think about it is eventually I envision it as basically a layer of infrastructure. And in the same way that, the internet has enabled all kinds of businesses, even not technology companies, but all kinds of businesses use the internet on a daily basis. I think blockchains and the underlying technology will be used to transfer value across all kinds of different companies and networks.
I agree with that. Okay, I'll give two predictions. I think one, Bitcoin becomes standard as an institutional investment, really on theme with what we've been talking about, but I really do think hedge funds, mutual funds, endowments, having 1% Bitcoin exposure, it's going to be standard. Two,
probably more than one.
Hopefully. Two, I think that crypto is going to be integrated in a way where we don't even know we're using it. I think the best example to drive this home would be remittances. So the remittance market, just for some context, has grown 5x.
Some stats?
No, has grown 5x over the last 8 years. It's actually like it's a blooming market right now. And if you look at what's happening, these legacy providers like Remitly and Zoom, they're coming in and saying, how can we make our internal operations more efficient? They're totally going to implement crypto, but the end users are never going to see that. You're just going to continue to use that app or whatever you're using and send money home where you need to send it. And I think we're going to continue to see that. Right now, we're really marketing cryptocurrency, but honestly, yeah, we'll probably still use it, but I think what's really interesting is these huge companies that are looking to integrate it in the back end, and we won't even touch it. So,
thanks for sharing your predictions. All right, let's open it up for questions.
Real quick, you guys
Yes.
mentioned earlier. Do you want me to do an intro or anything, or?
No, it's
Okay.
If you'd like to tell
No,
us a
please
story
do an
about
intro.
yourself.
You guys
feel
mentioned
free.
kind of the rules that dictate how Bitcoin is split up and stuff. Could you go more into that and like who sets those rules, why those can't be corrupted, etc.
Sorry, the
What was
rules
it?
of what?
The
Of
rules of like
Bitcoin
how when you're
issuance.
mining crypto, right? Like there's a certain value assigned to it, and then the whole value splits at a certain point, I think.
Yeah, so
Like the
there's-
halvening, like the,
Yeah, I can take this.
Yeah.
So at the inception point of Bitcoin, when Bitcoin was first invented, it was detailed in a white paper and also in a code base. And that code base, it has been upgraded over time. There have been patches made to it. Anyone who tries to tell you otherwise is too high on their own Bitcoin supply. But the reality is that the fundamental pieces of Bitcoin that include things like the issuance schedule of it, how many Bitcoins will ever become in existence, and then also how Bitcoins get distributed out through this mining process. Those aspects of it have never been changed since the code base went live and since they were detailed initially by this anonymous creator. And that's important because, as we know from looking at government systems around the world, when someone can update how much supply there is of money in a given system, you can end up with inflation. You can end up with problematic policies. And so one of the really interesting aspects of Bitcoin is it has properties that are more akin to something like gold, right? Where you can think of it in terms of a more fixed supply.
Thank you.
Thank you.
Sure, thanks.
Yeah.
So I wanted to touch on Facebook Libre a bit. It has the possibility to upend the way that we exchange value, not just as individual countries, but also as an entire planet, because Facebook has an install base of 2-ish billion people. So do you foresee Facebook possibly coming in and becoming the de facto way that people exchange currency, since they have that killer application that they can build off of, and potentially become, the new world central bank?
Yeah, I think the big question, first of all, is will Libre actually launch? And I think U.S. regulators in particular are not a fan. I think everyone hates Facebook these days, frankly, rightly or wrongly. I will not comment. But I think in general, they didn't necessarily do a great job of helping bring regulators along and involving them in the process. So I think the first big risk is, does this ever launch? I think from the crypto perspective, I think it's a very good thing for crypto because either it launches and it becomes a giant on-ramp from traditional currencies into the crypto sphere, moving a lot more money into the system, or it doesn't launch and Bitcoin ends up looking like the winner by comparison because Bitcoin is actually decentralized, whereas Libre is not. It's not controlled by Facebook, but it is controlled by the members of the Libre Association, which are companies like Uber and Visa and kind of mega conglomerates for the most part. I do think it has the potential to be very good for consumers because, to the point of remittances or value transfer across the world, just as you mentioned, the scale that Facebook has would make it automatically pretty widely, pretty wide-reaching. And so it could either obviously reduce costs for consumers, enable a whole host of other financial services. So I think the play there really is in the same way that WeChat is very, very widely used in China, and it enables, all kinds of applications and things built on top of it. I think a potential play there is that, Libre becomes the base upon which a lot of other applications and services are built. So, I think a lot remains to be seen, but it could certainly, end up changing how people transact and the kind of services that people use. But, again, whether it's able to launch or launch in anything resembling what the original plan was remains to be seen.
I recently had a brainstorm session with my friend John Cole about why Libre could change the world and how big could it get. And I think it might be helpful to kind of share our summary on this. So
Data?
No data, just stories. So if you think, we kind of zoomed into Uber. And if you think about how Uber's worked over the last, call it 7 years, in the beginning, they used to charge you for every ride you took. They charge your credit card. Those are Stripe fees, and Stripe fees are 3% plus 30 cents. few years ago, they decided, let's try to minimize that. Because I know it sounds small, but when you have a user base of billions of people, that number gets really big, really quick. So they went to batch processing. And that's basically like at the end of the day, they run your card instead of every time to minimize those 30-cent fees. Okay. That was cool, but then people started complaining because people don't want their credit card charged weeks later. So they had to kind of balance like customer success with when they charge the card and figure out the right time. And then, like, I think it was probably like a year or 2 years ago, maybe, they came out with the credit system. And if you go to Uber now, you can buy credits. And the point there's a marketing component, which I don't want to get into, but then the efficiency side, what that does for you is it gives them basically the ability to get upfront money and minimize those fees even further. Then the next natural step from this V3 to V4, which could be Libre, or like could be digital currency, is the fact that they no longer have to interact with Stripe at all. Because if you think about it, the problem is they still need to face Stripe because they still need to get you in those credits. But imagine if you already own the credit that they use, which could be Libre. Then they completely avoid the entire legacy system. They incur no fees, and it's the most optimal payment solution in the world. The problem with getting there, though, is it needs to be accepted by everyone. And that's exactly what you said when you ask this question, is that they already have this user base. And sometimes I know we think, oh, well, users are powerful, but especially in a payment coin, it's such an exponential benefit, and it just is such a natural network effect. So I personally am like a pretty big Libre fan. I mean, there's obviously the con to it, but I do see the potential. I think it could be huge.
Cool, thank you. I mean, I
Hope that clearly
about this for
answered your
30
question
minutes, but-
about where it's going. No, but yeah, thank you.
First off, just want to say thank you to SoFi and thank you to the panelists. It's been a great panel so far. Just a question, kind of tagging on the Libre comment. I think Jill probably, and certainly some of the other panelists will remember. One of my favorite questions from actually the congressional hearings was
What's a shitcoin?
What's a shitcoin? Maybe you could talk a little bit about that to the rest of the for the rest of the group, and if there's any projects that interest you right now.
Yeah, sure. So, yeah, people love to say, okay, there are Bitcoins and then there are shitcoins, and what they're getting at there is that as much as we love to say, okay, you have Bitcoin that has this fixed supply and that's this sort of beautiful property, the reality is we've opened Pandora's box with this whole technology, because you or I or anyone really can go in now and spin up our own currency. I can go home tonight and I can create Jill coin, and I can try and go out and sell those Jill coins to people for money. And those Jill coins, I can probably keep printing more of those however long I want. That does not necessarily mean that they have any of the properties of Bitcoin, even if they're using some of the same underlying technology. And lo and behold, of course, this is actually what we've seen. We've seen this Cambrian explosion of altcoins, is what I like to call them generally. And we've seen people spinning up their own versions of coins, ranging from basically memes. Dogecoin was explicitly created to sort of poke fun at this whole space, the very fact that people could go and spin up their own coins. And now that has like billions of dollars worth of value in this meme coin. And so I think that there is a larger buyer beware story to be told here of there are a lot of projects out there that are doing very real, very cool innovation that I think will wind up changing the financial landscape. But do your research before you go pouring money into something just because you heard about it on the internet.
How does someone actually even go and begin to do the research?
I think one good way, honestly, is being on forums like Twitter and Reddit. That's where a lot of the conversations are happening. When I tell my Wall Street friends this, as they're asking me, like, "Oh, where do I go for really credible research in crypto?"
Reddit.
And I'm like, Reddit, yeah. And they're like, oh dear God, this is worse than I thought. And there's some truth to that, but I also do think that there is something really kind of amazing about the fact that you no longer have to be inside the four walls of an investment bank to be participating in conversations about emerging asset classes and whatever. So I would say start following the conversations on those forums.
I just added that. There's some really good podcasts too. One I would recommend is called "What Grinds My Gears." Check it out.
Oh, thank
There you
you.
go.
That is
Yeah,
Jill's
that's my
paid
podcast.
podcast sponsorship.
I was not paid, no, but I do run a podcast called "What Grinds My Gears."
It's really
that tries
good.
to break
Yeah, it
down
is.
Yeah,
all of
everyone should
this.
listen.
So thank you for the plug.
Entertaining and informing. Yeah, how many episodes have you done on that? Is it 20?
27.
Wow.
Yeah.
You learned
Never
a lot
do a
about crypto
podcast.
and,
It's a
and
lot of work.
finance and macro and all sorts of stuff.
Yeah.
So check it out.
Thanks.
Hi. So one of the core aspects of blockchain technology is the decentralization, right? But I think nowadays most of the big players in the industry are like centralized entities like Coinbase or Binance. So do you guys think, say, like in 10 years, do you think they will survive, or will they get taken over by some decentralized organizations, or do you think that like maybe they can work together? Like maybe like SoFi will it turn into like DeFi or something like that? Yeah.
Well, I think some of the centralized players are starting, including Binance, which you mentioned, are starting to work towards having a, let's call it less centralized, I guess, part of their business. I think the problem right now is that you have kind of this tension between how difficult, like you can manage your own money, but it's harder. And maybe I don't want to manage my own money because if I lose my password, nobody can reset it for me and literally my money is gone. So that's like not ideal user experience. So I think for many users right now, using a centralized alternative where you can reset your password or something like that is a better option. I think eventually, and a number of companies and projects are working on this, hopefully we'll solve this problem through technology. So you will potentially have an alternative way of re-accessing your funds if something happens, rather than having to trust a centralized entity. And so in that way, we're moving towards the best of both worlds. But yeah, I mean, I think it's a very real concern because I do think it's a little bit ironic and somewhat sad that, the idea, control your own money, be your own bank. And then everyone's like, cool, but I'm going to use Coinbase. And now Coinbase has all the money. And so at that point, is it much better than a bank? I could go on for days. But, I think hopefully the problem is eventually solved mostly through technology.
I think I'm so happy you asked that question because I think that's the elephant in the room. Like the whole space started because of this philosophical movement of decentralization, as Arianna said. And right now, it's the question, how much does decentralization matter? And I don't think anyone has the answer. I think we're figuring it out. I think that human beings really are lazy. That's what we're seeing. I think that we value security, but the jury is still out for how much privacy still matters. And I think, you can look back in history and say we don't trust the government anymore and Facebook signups are decreasing in growth and whatever. But the thing is, like, at the end of the day, people are going to potentially just take the easiest option, and that might be with centralized providers. I actually don't have a prediction here. I just think it's really interesting to watch, but I think we'll have an answer in the next few years.
I would add to that. I know so many people who have started to say over the last few years, I really care about my privacy. That's why I don't use Facebook anymore. I only use Instagram.
Yeah.
And you're like, do I bother to correct this?
Yeah.
But I think that that's a really awesome point, is that we've started to see some narrative shifts, right? Of privacy matters, security matters. 10 years ago, if you had told me that Apple was putting up billboards saying that, trust us because we actually value your privacy, I would have said that you were crazy, that there was no way that would become a mainstream marketing point for them. But it has. But we're also still seeing this huge gap in sort of consumer and user education around what that actually means. And these are all sort of points that are, on the one hand, being addressed by cryptocurrencies because suddenly you have new options of how to use your money. But the reality is we're seeing very few people actually use them in that way, as you address.
Thank you, and I would definitely use SoFi if it turns into
Thank you.
DeFi.
Oh, you want it?
Because
Only if it turns into
Another
DeFi?
paid
yeah, because I'm
placement.
from China. Right now, I cannot
Anthony, what do you think?
sign up on SoFi, but I'd like to see.
It's amazing.
I'd like to see it turns to DeFi. Thank you.
All right, we'll work on that. Thank you.
Hi, thanks. So I actually wanted to talk about the decentralization, but since it's mostly been covered. But I will say the reason I invested in Bitcoin was because of the decentralization, and I wouldn't go to Libre for that reason, or I should say the centralized component. I think that's a really important part of it. But since we've covered it, I'd like to rephrase and ask you a little bit about manipulation of the market, because maybe Jill can speak on this. Because, for example, derivatives in some of the markets really manipulate the market. And what's the prospect for that being a problem with, say, Bitcoin and the cryptocurrencies as they start to become part of the market?
Yeah, no, great question. So what I would say is anytime you're dealing with an emerging asset class, and in particular, anytime you're dealing with a more kind of niche or illiquid asset class, you're going to deal with bad actors. And we've seen this throughout history. If you look back at sort of penny stocks and the way that those came about and kind of the rise and fall of the popularity of them, you had boiler rooms, right, where people would be selling, grandmas in Nebraska on these penny stocks, promising huge price rises. And then lo and behold, they would be just sort of pumps and dumps. It's been very jarring, but we have indeed seen some of these same things play out in the cryptocurrency space. And this goes back again to the question of, I could go home and I could create Jill coin, and I could theoretically run my own boiler room, right, of going out and trying to sell people on my Jill coin. And you see this play out in other ways in these markets as well, of more kind of under the radar, sometimes even more nefarious forms of market manipulation, of traders painting the tape, they call it. There are all kinds of things that bad actors will do to take advantage of new systems that are poorly understood. And so here again, I think that there is an element of buyer beware. What I would say, though, is that this is an area where I think the Coinbases of the world, the SoFis of the world, the Robinhoods of the world have actually done a lot of good work by building up transparency in these markets, by building up liquidity, in particular in assets like Bitcoin and Ethereum. It's a bit harder to speak to the longer tail of the rest of them. And with those, I think that there is a lot better now transparency and trust that you can have that those markets are operating fairly.
Over here.
Hi. I don't know much about cryptocurrency, so my question might be very on a low level.
No
but
worries.
One of the things that stopped me from getting involved was I was going to get involved because Bitcoin. I was like, I could use Bitcoin. It's decentralized, and I could buy something with it, and then I never did. But then when all these other new currencies came out, I just didn't understand the value. Like, why? What makes them valuable as assets if there's so many of them?
I mean, I think to use a real world analogy, it's like part of it is a construct, right? So if you think about like a Picasso, the value of the Picasso is some old canvas, some paint. The value comes from what we ascribe to it. And in some sense, it's actually the same as fiat currencies as well. Like this random piece of paper is worth $100 because we as a society have agreed that it's worth something. And so I think the concept of cryptocurrency having value is actually a similar shared social narrative. In the same way, once we have come to terms with the fact that this is scarce and there is demand for it, then it derives a lot of its value from its scarcity and the fact that there's a finite supply. So just saying, oh, well, I have another canvas and Arianna painted it, and technically it's the same materials, does not make it equivalent to the Picasso. And so I think that's how I think about, the copycat coins. Just because they exist doesn't mean that there's any demand for them in the same way there's no demand for my Picassata.
Totally. I think that I always remember that a professor once asked, like, what is this worth? And it's worth whatever someone's willing to buy it for. And that has always really stuck with me. And I totally agree with Arianna's analogy and the Picasso. I think that I would say when you're looking at this slew of coins, what do you think someone would buy that for? Do you think somebody would buy it in a year for that? I mean, not that this is investment advice, but I really think that the value is a myth that people believe in it, and the brand of these coins is really underrated. There's a lot of marketing that goes behind the scenes, and Bitcoin has this incredibly long history and supporters and everything. And I would just say think through what people are willing to buy it for, both maybe like subjectively, but then also objectively. You can just see the market and see how shallow the market is. Does it have some depth? What does it look like? How many exchanges are supporting it? Stuff like that.
Yeah, when you say shallow and depth, just explain what you mean by those terms.
Oh,
Like, what are they supposed to be looking at in terms of those metrics?
Like how many buyers are there? If for example,
and so the data point you would look is like 24-hour trading volume.
Right. And you the thought process, right? Like the question is like if somebody put on like a sell order for X amount, how much would that move the market? How much would that move the price? Is this a large enough market or a deep enough market where a ton of supply can come online and that price is steady? Because that naturally, I mean, and again, what we've been talking about is like this is such a nascent asset class and we're seeing it mature like other asset classes have. But until we get to that point, it is going to be a shallow market. And that's a reality that we have to get through.
All right, over here.
Hi. I was hoping to get your all's take on like your long-term outlook for stablecoins, not really Libre in particular. I think we've seen like a big couple years for them, specifically because of like Bitcoin volatility. And I guess what I'm curious is, over like a long period of time, do you think that our reliance on fiat will eventually kind of switch towards like a SAT being the stablecoin?
Let's start with the definition.
Define
stablecoin, yeah.
So one of the big criticisms of Bitcoin and of cryptocurrencies in general is something that we actually opened today talking about, which is their volatility. They are extremely prone to huge price swings, even over the course of a single day. Sometimes for good, sometimes for bad. But that prevents them from being very useful as a form of payment often, right? Because you might be spending Bitcoin on a piece of pizza in the morning, and that Bitcoin could have bought you 12 pizzas by lunch, right? And so there's been a lot of experimentation in terms of trying to create or manufacture coins, cryptocurrencies that have more stable price mechanisms. And the attempts to do so have ranged from holding one-to-one $1 in a bank account for every unit of the coin that gets minted, so that we would call sort of centralized and backed, to having algorithms that are trying to basically run central bank policies on the supply of the currency outstanding in order to try and regulate the price of it. So that's kind of the overview and the definition.
Yeah, I mean, I think stablecoins will be really important. I think my long-term outlook is that I think Bitcoin will continue to gain adoption and become more widely used. And as it matures, and this has already been the trend as much as it doesn't maybe seem like it, but the volatility will go down because as it's more widely used, to Casey's point, the markets become more mature and there is the ability to absorb larger orders. The volatility swings will diminish over time. But stablecoins, I think, allow you to basically use cryptocurrencies for more day-to-day functions, whether it's buying your pizza or getting paid a salary in it. And so I think that's a really important part of helping bridge the gap between something like Bitcoin and the everyday use cases that businesses and people need. To Jill's point about the different kinds of stablecoins, I think it's still very much an open question what ends up being used most widely because they each have their advantages or disadvantages. And some of the algorithmic ones, you know, I've generally been a bit skeptical about the ability for them to resist malicious attacks in the same way that George Soros famously broke the Bank of England by shorting the pound. You could imagine situations in which if the financial incentive was great enough, people could also take down various stablecoins. So I think there's a lot of game theory and complicated political and financial dynamics behind the scenes for some of these. But I think as a category, stablecoins are going to continue to grow in adoption.
All right, we've got to wrap this thing up. I want to end with one super quick takeaway from each one of you. What do you want the audience to remember from tonight?
I'll start with kind of a scary one, which is just buyer beware. It's all well and good to come to something like this and be like, all of this stuff is so cool. It's the future of finance. I firmly believe that. But there are a lot of scams out there, and there are a lot of, to use the phrase that one of the question askers used, there are a lot of shit coins out there. And so do your own research and be really thoughtful about how you're allocating your money in this space.
I would say, number one, I'm going to do two because why not? Sure. Don't try to be too clever. So like if someone's like, oh my God, this thing is going to be the next Bitcoin, it's probably not. You're much better off not being super clever and being like, I'm just going to hold Bitcoin, because if this is not something that's going to become like your main focus, it's very difficult to stay abreast of things, and there are a lot of scams and things like that. So start simple, and then you can build your knowledge base from there, would be my recommendation. And the other thing is take a long-term outlook. So if this is money that you need like tomorrow, probably not a good place to park it. The volatility is very much there. And so if it's something you say, oh, this is a small allocation for me, I'm willing to wait 5 or 10 years, see what happens, great. But don't subject yourself to emotional swings tied to it, because that just doesn't make for happy living.
Yeah. I think my takeaway would be don't do your research. And I think
don't do your research.
Don't do your research. No, do your research. I think that what we need for this market is more people that are willing to hold through the swings and believe in this tech. The last thing this market needs is more short-term buyers that are going to try to swing this. For this to become a reality for the globe, we really need more believers. So do your research. If you need to know where to look, ask us. I think we all have Jill actually has a fabulous list on her website of things where the best places to learn. I think that would actually be a great starting point. But also like Crypto Canon. I can talk offline about this, but just make sure you think hard about this and think that you want to be a part of this community.
Yeah, and I appreciate you all coming out tonight. This is an amazing first step for some of you, and later step for others. But thank you so much, and thank you to the panelists. I'll just stay for 1 second. All right, so really quickly.
Legal. Everyone's favorite.
Here's some disclosures tying to what they were just saying. Please read them carefully. But yes, we will be launching our app very, very shortly. The SoFi app will have crypto in there. All you need to do is you open up an active invest account, and you can go on the app and follow Bitcoin. If you do, you end up on the wait list, and we'll follow up with you very, very shortly with access. So thank you so much.